Hey everyone, so today I'm going to share a simple and effective market structure trading strategy that'll help you on your path to consistent profitability. And whether you're trading a futures account, a funded account, a CFD account, doesn't matter. This is a must-watch video. I recommend watching it all the way to the end because I'm going to show you simple market structure, and then we're going to go to more realistic, dynamic market structure. I often see traders making this mistake where they don't know what side of the market to be on, whether they should long or short. And in this video, I'm going to clear all of that up for you. And this video is Market Structure 101. So if you're just starting out, this is the first thing that you'll want to focus on mastering. I highly recommend doing your own chart analysis and then posting it in the comments of the school thread. If you're in my school community, then you already know this is where you get your feedback. This is where you get the biggest upside to being in here, is leaning on the community and getting that feedback. So post your chart analysis. Don't skip that step. Let's start with the basics of market structure. Now, you probably learned this online. You've probably seen something like this. Market structure tells us the direction in which price is moving. If the market structure is bearish, okay, making a series of lower lows and lower highs, then we're looking for shorts. We're looking to make money going down. We're going to short the market. We're going to make money going down. But if the price is going from, higher lows and higher highs, and it's reversing, going back up, we want to be looking for longs. We want to make money going up. Okay. So it's pretty simple. So let's go from the left to the right. First, we have our high. Okay. Market then makes a low. Now the market pulls back and makes a lower high. And what this is signaling that this point is lower than the previous high. That's why it's called a lower high. From there, market makes a lower low and does something we call breaking structure. Now, the break of structure, you will see right here, I have it marked already, is when the market passes lower than the previous low. Okay. So the previous low or lower low, that's going to be the break of structure. Now, what happens? Well, market pulls back up, creating another lower high. Now, how do we know that this is a lower high? Okay. And by the way, these are all swing highs. All of these on the outside of price are swing highs. These are your swing highs. Okay. These are your swing lows. So anything on the outside are your swing highs and swing lows. So that's why I have that there. But the market pulls back and creates a lower high right here, and then proceeds to make a lower low, breaking structure along the way. You can see that the break of structure was here. And so when the market surpasses that previous lower low, that's when that break of structure occurs. But then something happens along the way. The market doesn't stay bearish forever. It never moves in one direction forever, right? And what does it do? Well, it changes character. And a change of character occurs when the market goes from this low down here, right here, this swing low, and the market swings up and it breaks structure, but also changes character to the upside. So why is it called a change of character and not break of structure? Well, it is breaking structure, but it's also letting us know that this lower high right here is no longer respected. We're now going from lower high, okay, to a higher high. Okay. So over here, we had a lower high. Over here, we have a higher high. Sorry for the bad handwriting. From that high that was broken, right? Now we have a higher high. It creates a higher low. And the market then creates another higher high. And at this point, it's at this point, okay, where let me just walk you through it. We break structure and create the change of character with this move right here. We then now we have a swing point that we can identify. The market swung, but it didn't pass the low. So we have a higher low. So now we have a higher low, right? So this right here is a higher low. Okay. And now we have another higher high. See this? This is another higher high up here. And it's at that point. So only after this point, market changes character, pulls back, gives us that higher low, right? Pulls up, gives us that higher high. And it's at this point where now we are pretty confident in the trend. The trend is up. It's shifted. And now we can look for our one strategy for life setup. And that's going to be more details on that later. But this is where we're going to be looking for breaker blocks, fair value gaps, in our setup. So that's what you see, that dotted line is representing what price is most likely to do. If we're in an uptrend, then it's most likely to create some type of higher low followed by a higher high. Okay, so hopefully that's clear. And this is a very clean chart. The reason I start here is because I think that this is very easy to understand. Now you know what a break of structure is. You know what a change of character means from a basic level. But this isn't realistic. This isn't a realistic chart of what price is going to look like. So what we're going to do is go over to a more realistic chart. So bear with me here. Okay, so as we take a look at this more complex, realistic chart, this is more like what price will look like on a chart. Don't get intimidated. This is a lot easier than it looks. And we're just going to go from the top down. So the first thing that we want to do is identify our swing high and our swing low. And once we've done that, we can really understand that anything inside of this swing high and swing low is a range. And in that range, we can consider this internal structure. So we actually have now identified a price range. So it's pretty cool, because once you've identified that price range, any type of internal movement is not really going to be movement that you're looking to trade. And traders make the mistake all the time of using these internal movements as, like let's say right here, they would look at this and they'd say, oh, that's a break of structure. And so what a lot of traders would end up doing here is they would end up positioning themselves when price goes up, right? And then when it pulls back, they're looking to get in. They want to get in on a pullback. A lot of traders want to do this. So this would be a lot of traders' mistake right here, is they would set something else up, like they would set their trade up like that. And so they would just get their stop loss hit and they would wonder why. I mean, price broke structure, right? Well, no, not according to, external swing points, which is what we're going to look at. We're going to look at external. We're not worried about the internal swing points. Those are not actual breaks of structure. Well, they are, but they're internal structure. So they are breaks of structure, but they're internal structure. So we're really not going to worry about those. We're going to remember that we are bearish if the structure is trending down from a high. So here's your high. So we are bearish if price delivers from this high to another low. Okay. And you can see that our structural break is actually right here. Okay. That's our break of structure. Once we see that, we can identify the next swing high, which will be the highest point before the break of structure. So where's the highest point before that break of structure? It's right here, right? And we can anticipate, because the new swing high helps us anticipate that price will likely trade lower. Now, where's the new swing high? We swing up to this point. Price ends up swinging from here, right, to go lower. So somewhere in here is where we would have a trading model identified. And that's exactly what we do. So, but it's important to note that if we see this lower high and we see you're going to learn what a swing looks like here. But when we see this swing lower and identify that, we know that market is most likely going to continue its downtrend, thus breaking structure. Here we have another break of structure to the downside. creating a lower low. Okay. And when we see price swing from this level, let's just say hypothetically we see price right here, we see it swinging up. What do we know price is most likely going to do? It's going to create a lower high, right? And once we see price swing from this level, and I'm just going slow so you understand it, what do we anticipate price is going to do? Price is going to create a lower low because we are in a downtrend. And here is another break of structure right here, okay? Now, this trend is going to continue until the trend ends. That's why they said they always say the trend is your friend until it ends. And so our goal is to catch these reversals that I'm marking out in purple right here. That's our goal. That's what we do, okay? And so this trend comes to an end. And how do we know it's coming to an end? Well, because what happens is from this low, we make a higher high right here. And what does this officially do? It closes up here. This higher high closes above the previous lower high, just like we talked about in the last chart. And so we can officially identify this area as what? This is a change of character. This is a price shift. Price is shifting now. So momentum is shifting back in the opposite direction. Now, the internal swings that happen, we are ignoring, right? Based on what we just learned, we're ignoring these. We're not taking trades based on the internal movements. We're taking trades based on the external movements. So price moves lower, creates a lower low. What does it do? It creates a higher high. And if we're in an uptrend, we should anticipate the fact that price is probably going to pull back to create a lower low. And then we should anticipate that it's going to make a higher high until it doesn't, until price breaks this, structure, this upward structure. Now, before I move forward, how do you determine what internal structure is versus external? How do we know that this is internal structure rather than external structure? All you're going to do is you're going to ask one simple question. What created this high? What created this? Right? And you would see that this low created that high. Yeah. And so therefore, anything in between those 2 points, you can ignore. That's going to be your internal structure. Now, if you look here, you'll see that this is marked out as a swing low. Now, how do we know that was a valid pullback? What gives us, was it just one candle maybe sometimes? Like, what really gives us that validation? And that's what we're going to talk about right now. We're going to take a look here, real versus fake. And this is very simple. You can chalk it up to as simple as when you see 3 candles, 1, 2, 3, in this case, pulling back and continuing an uptrend, we will then consider that a valid pullback. So this is where you would be making a, let's say right here, that would be a pullback, structural pullback to this uptrend that we're pretending is here. We have a high, right? You have a low, then you have a higher high. When do you mark the higher low? When do you mark that? That's the question, okay? You mark it when you see 3 candles, and that's going to be your signal to at least acknowledge that that is a valid pullback, okay? So on the right, you see that there's 2 candles. I'm not going to be considering this an area to worry about. If price were to break lower than that, and let's say price came down like this, I would still be looking to take longs in this area. If it gave me the ability to, and I was in an uptrend, I would still be looking for a reversal setup to go long. I wouldn't consider that a change of character to the downside because it doesn't have the 3 candles in a row. So it makes it really simple to identify a real from fake and when you should really be paying attention and when you should just ignore. So hopefully that helps when you're looking at the chart and you say, well, I don't know if that is a break of structure or if I should consider that. Well, how many candles was it? Did you get 3 red candles in a row? So now that you understand more basic market structure and real versus fake pullbacks, so that you're not just counting everything as a break of structure or a change of character, now the question is, how do we trade these on a multi-time frame perspective? There's all these time frames: 1 hour, 4 hour, daily, 5 minute, 1 minute. What's the best time frame? What should you be doing? Well, I find it really easy to think of it as a pattern. Okay, price is basically, it's coming down, right? And then it's making a lower high, and then a lower low, and then a change of character. Okay, now this pattern that I drew out, this W, is visible on all time frames, and you will always see this pattern happen every single time price swings. Every single time price changes character, you will see this pattern. And what's crazy is you'll see it on higher time frames and lower time frames. So let's just say I have, on this 15-minute chart, price moves down, and then a swing point occurs down here, and my swing point right here to go up, right? What you'll see on a 1-minute chart, and this is the other time frame that I have, the 1-minute time frame, you'll see this 1-minute chart, the same pattern. You'll see the same thing happen. It'll just be in a really small area. It'll be down here, right? And these are the ways that we're able to get such incredible risk to reward, because when you're zoomed in, you actually see, the break of structure down here. You'll see that change of character happen, and a lot of times price will pull back into this area and go higher. And so you get in, and where we would be getting in here, what it would look like. This is not the entry model, but I just want to show you kind of what it looks like. Price, what you don't see on this 15-minute time frame is this. Let me show you what you don't see. You don't see the zigzags. Price is zigzagging. This is your 15-minute. On a lower time frame, that's how price moves. It zigzags on any time frame, but on a lower time frame, you'll see zigzag. And so when price is zigzagging, there'll be some type of entry down here based on our entry model. And that's where we would be looking to take this and take advantage of price action right in here. And we'll talk about, TPs and all that stuff in a different video. This is just teaching a structure, but the biggest thing that you recognize is that this pattern is identifiable on all time frames. And each time price swings, here we have a lower high, but what does price do? It swings to the downside here. And this pattern that I have over here is visible on that 1-minute time frame. And once again, this is how we're trading, and we're getting, now we're taking a short. And what does price do down here? It does the same thing. You can see that pattern is going to be shown so we can go long. So when you take this concept of market structure and you combine it with liquidity and timing and a rules-based system, you're going to be very strategic, very accurate, very ninja-like with your entries. And this is how you just get precision entries in the market with really good risk to rewards. And, understanding that on this 1-minute time frame, the same rule applies with what we learned over here, right? You still want to see 3 candles to give you that pullback, to give you a valid pullback in any one direction. So you're not getting faked out. You're looking for that. You're also, you got your larger time frame, which you've identified as an up or down trend. And so when the market pulls back and starts reversing at some key levels, let's say a liquidity level, then you're going to identify this pattern on a low time frame. All right, so what I want to do now is I want to go to real time and do some real time analysis, identification of reversals. And this is just good practice. So that way you really get this ingrained. Okay, so from the left, so we have a high, we have a higher low, we have a higher high, And this broke structure from here to here. That's our break of structure. Yep. We also have another break of structure here. So we'll go ahead and mark that up. And that created our high. A higher high, excuse me. Our higher low was created right here. And so moving forward, we now have a what? What would this be? Let me zoom this in just a little bit more and put it into view so we can all see very clearly. Okay, what is this area here? What did this do here? So price moved up, then price came down. What did it do right there? Well, it created a what? A change of character. Yep. So it's a change of character right here. And price then moved up. So price moved up. What did it do? Well, it created a lower high because we have a change of character. You see, so if you understood this, you would understand that price is most likely going to do what? Create a lower low. And that's exactly what it does. Keeps falling all the way here. And what do we have along the way? Well, from this low, we have a break of structure. Okay, so we want to, this is just labeling everything, just following price action. When we create that low, what should we expect? A lower high. If the trend is to be down now, we should expect a pullback, which is what price did, and created a lower high. Now, if we have a lower high, and you're going to guess it, I know, but what should we expect that price does if we're now in a downtrend? What should we expect that price does now that we're in a downtrend? Well, it should essentially continue the trend down, right? So we have our break of structure here, and that's exactly what price does. It makes a lower low. And as the trend would say, it just continues, right? So we go from here to a lower high. Okay. And from there, what should we expect? A lower low. And that is exactly what happens. Now, it gets there kind of funny, but it gives it to us. There's a break of structure. And we're just going to zoom down here. And price just keeps dropping, keeps dropping. There's our high. Remember, this is our last previous high. So this wouldn't fake you out because you're like, okay, well, this is only 2 candles, 1, 2 to the upside. So I'm not even going to mark that, right? So I'm not going to mark that. So where's our low? Well, our low is down here. Okay, nice. Where's our high? Well, our high is still over here. Okay, still right here. All right, great. So we're not faked out. We have everything marked. I'm just going to get rid of this so it's all clear. So we have a lot of internal stuff going on between this high and this low, right? A lot of internal stuff going on. And so what we see is what? Well, we see over here. So price, let's just follow price. So price comes back up. Okay, it's definitely more than 3 candles, right? So we can mark this high, right? And then what does it do? It pulls down and we have a low. And then market pulls up, we have a high. So this is a lower high. And by the way, I mean, these are all lower highs. This is a lower high, right? This is lower than this. And this is a lower high. Okay. So just following this up nice and clean. Okay. So now market pulls up again. And what do we have? A change of character. Okay. So now we have a change of character. Let me mark that. And where does this change of character happen? It happens right here. Okay. So there's that change of character that happens right here. Okay. And I won't forget to mark that low. Okay. So now what should we expect with the change of character to the upside? Well, we should expect higher highs, right? The same thing, and higher lows. So from this point, you can see that we had 1, 2, 3 candles for this pullback. So we can mark this area here. And that is our swing high. And what does price end up doing? Well, price just takes off to the upside all day, all night, all day, all night, whatever. And it just makes a higher high until when? Well, until I can see at least 2 candles. And the point that I'm going to mark is right here. See that? So that's where I saw at least 3 candles. I think I said 2, but it's 3 candles. So you have 1, 2, 3 right there in that area, pulling back, right? So that saves us from having to worry about, where our low is. In fact, is this our low on this time frame? No, this is not our low on this time frame. So this would actually be our swing low down here as well, and our swing high. So it's a very weird area to mark because you just got no price action really, but that's your swing low. Your swing high over there, as we've marked up on the chart here, price pulls back and creates another swing low. We have three candles pulling back, yeah, but we don't surpass anything of really that much of importance. We go here, we have 3 candles going up, so that is our range. So now we have range. So we now have a range. And what does price do? Well, it continues the uptrend. So your breakup structure and price is off to the races and pretty much just goes straight up. So that is it for Market Structure 101. Don't forget to post your own chart analysis and post it in the comments and get some feedback on that in our school community. I hope that this helps you see structure better and helps you become a more profitable trader. I'll see you in the next one.